You've given us also a brilliant segue into the second part of our conversation, which is to talk a little bit more about the customer, to talk about profitability and how some of the more bottom line initiatives can work, right? So you've spoken about customer identity. You helped us understand, how do you build very tightly around it, right? And this is probably one of the best definitions or examples of like customer centricity that I've ever heard. It was absolutely fantastic the way you guys had to pull so many different things together across people, government, operations, technology, to do such a simple thing, just like tracking where is the customer now and how do I ensure I can reach him and he or she can pay me back. On those lines, right? Let's understand a little bit about in the context of insurance specifically, right? What is like customer experience, customer delight, customer success? What do these things look like, right? Like for you all as insurers, what do you see as that aha moment for the customer, or those things that really satisfy or give some joy to a customer? How does it help with retention, with upsizing of your policies, with the willingness to say buy additional products that are necessary or important, but say, as you said, right, like the customer is not necessarily the most aware, would be helpful to understand what that looks like. And if you could tell us a little bit about how operations can play a role in driving that NPS score and driving that customer success, that retention, all of those aspects.
So, multiple aha moments in the entire life cycle, to be honest, that is the potential aha moment. First is, as I said, how fast are you able to give the customer the product when you're onboarding him, right? And before that, how seamlessly are you able to do it? Like, I don't want to come back to you second or the third time after you've given me the application, or you've kind of decided to be my customer and say, you know what, hi Rohit, I still need 10 more documents from you. I need 5 more documents from you. I need 5 more declarations from you. I think I lose you that same very moment, right? Because you as a customer may not appreciate. Maybe there's genuinity in those asks, right? But you may not understand as to why are they asking me so many, and that becomes the first touch point. So if I can integrate a lot through third party aggregators, third party providers, to get a lot more information about Rohit rather than taking it from Rohit, is the first aha moment. While I'll say, okay, Rohit, I got to know about you. These are four things more that I got to know because I pulled some data out from somewhere, and I know that I'm ready to now underwrite you and kind of onboard you. Then the entire experience of onboarding, right? So what happens is, everybody likes market automation, right? So now Rohit has become my customer. I need to send him the policy document. I can send him a nice, offline document, which is printed, packed, and all of that. But I can also register you into the repository, the insurance repository, and send you a PDF on email, on WhatsApp, on SMS, all of that. Now, the point is, you may have already acknowledged that you received what I sent you, let's say via email, one of the mediums. But I keep bombarding you with multiple times, and because it's all so automated and so mindlessly automated, is that you will receive 10 WhatsApp from me over the next 1 week, same information getting repeated. Hi Rohit, thank you for becoming a customer. This is the document, this is the feedback form. Can you kind of get onto the link and give us a score, five being good and one being bad, whatever, right? uh, Now what happens is, if I keep pinging you, and I've seen that happening. If I keep pinging you, you may say, you know what? Okay, let me get onto that and give you a feedback that, you know what? Stop pinging me. I acknowledge that I got what I did. I'm happy. I'll remain in touch with you. Let's make those touch points more meaningful than spamming it, right? That could be a big aha moment. Now, you are due to kind of come back and pay me. You've taken a product where you're paying me after a year, let's say. Uh, so now what happens is, before the 13th month kicks in, technically, when do I communicate with you? And how do I communicate with you? And which medium do I use to communicate with you? I've already had an experience to say that out of the three mediums that I tried to communicate with you, which could be offline via a call or an email or a WhatsApp or a SMS, I found Rohit had given me a confirmation via WhatsApp. So now I know that that's your preferred medium of communication with me. You are more acknowledging things there. So rather than again kind of blasting you with a reminder across 5 touch points, 5 other mediums, can I use that one single medium for a protracted period of time and then see whether if you're responding great? If you're not, then I switch the medium.
Sure.
right? So these are experiences that you would like to understand, that the company is much more mindful. They understand me well. They understand me curiously well, right? It Because that's how you will stay on long term with me. Now, the irony would there be that if you were to pay me monthly, you paid me 1 month, and then the second month onwards, my second transaction with you starts, right? Now, imagine the number of prompts or reach outs that would happen because it's monthly. So after every 15 days, you would hear me. Now that's very tricky. Do I overdo it? Do I underdo it? Do I really be more curiously specific about you? Would actually give you that aha moment, right? The last aha moment, and in between the entire journey, there are few more aha moments. For example, you've heard something about the market. You've heard something about the industry. You've heard something about what's changing around, right? And you're waiting that, okay, I've had a product with an insurance company. What's happening with that? If I would to proactively come back to you through your preferred medium and say, you know what, this is what you would have heard in the news. This is a collection of what you're hearing about regulations, laws, market situation, and this is where you are. Don't worry, this is where we've got your back, right? If there are things to change, I will be telling you at the appropriate time, in a way, so that you can rethink about your financial priorities or your needs. And the last is obviously the moment of truth, which is for which all insurance companies are supposed to be built, which would be when your policy expires and you get back whatever you thought would get back, or there's a death of the policy holder. At that point of time, how do you communicate, and how fast you communicate, and how do you keep your promise is the real moment of truth, right? If you're working in a segment that is an affinity in itself, it could be, let's say, a bank. If in a banking, a bank customer went through this the entire situation where he or she could not survive, and using the bank's network, you were able to reach out to the next of kin and kind of fulfill the need. That the bank would then kind of talk about it to the other customers, right? Even though the customers don't know each other. So that's the real word of mouth that comes through when you kind of live that moment of truth. So multiple aha touch points. How I keep saying this: how curiously curated can you be to kind of satisfy the customer? Is somewhere that will let you know. What do we do about reassessing the needs of a customer? Now, you were 25 years old, you had different priorities in life, and you brought an insurance policy because you realized that there's a certain need that the policy was filling in your asset and liability. As I say, a balance, every individual has a balance sheet. There's an asset side of the balance sheet and there's a liability side of the balance sheet. Now, uh, how are they matched is something that an insurance policy, a life insurance policy, helps you to do. You have a home loan that you've got to pay. That's a liability, not an asset, but you have an asset, which is the home. Now, you've paid something upfront, but you've taken a loan for it. Minus that is your liability, right? So minus that is something that you'll put as an asset also, and minus that you would put as a liability also. So you have to make that ALM match, right? The asset liability match has to happen. Now, as you grow, as you kind of age, those asset and liabilities keep changing. You have a kid now into foray. You've got married. You've got parents who are now retired, and you've got to also be mindful of their survivability. So there's obviously a huge scope for you to kind of visit your financial needs, and the insurer to come back to you and say, yes, let's look back at your financial gaps and needs, and let's see whether you need another product, which, or do you need to add something to the existing product. However, the timing here matters, and that's where operational efficiency comes in. The customer need is evolving. It is evolving on a day-to-day basis, but you may not be able to address those, or you should not be able to address those needs at every time the need changes. Why? Because as I said, it's a long-tailed product. Now, the general analytics that we've come out from customer behavior is when a customer pays for at least 6 times with you, he's at 6 financial touch points with you, then the customer stays along with you. Now, in a monthly mode case, where a customer is paying me monthly, which means 6 months. If the customers run with me for 6 months, rest assured he's going to run with me through and throughout, because in the 6 months I would have filled those gaps, fixed those issues that he would have faced with me. And he would also have got into a behavioral muscle memory of, okay, I've got to pay this much amount to the insurer on this date. So he kind of gets into that rhythm, right? In case of an annual mode, it gets a little tricky because a customer, till the time he does not pay for 4 years, which is four touch points or five touch points, you doesn't get into that muscle memory, right? Because the touch points are spread far across, right? Rather than having it monthly. So those are the points that we've identified where I can reach back to the customer once those milestones are kind of done. Then listen, you've been loyal to me. I've been loyal to you. You've got the hang of how I do it. Can I now sit with you, relook at your needs, see whether you want to really look at an opportunity? It may look delayed in some cases, but you're also protecting your entire life cycle and the entire efficiency, which you've already done by losing the existing customer to just to sell another product is something that is not very wise, right? You've got to protect what you've sold and then get that benefit to benefit that customer too.